look. The crisis between Saudi and Iran, it comes after a year of falling oil prices. Iran is poised to bring even more oil to the market following last year's nuclear deal. CNN's John Defterios joined me to talk about how oil markets respond to this rift.
In fact, Richard, this is a market that's been described by a glut for the last 18 months. But what happens now with the split between Saudi Arabia and Iran, it reintroduces risk into this market. In fact, regionally, some are describing this as a comparison to the Iran-Iraq war during the 1980s. That's how high tensions are. And they're talking about commercial splits, breaking airline links. And we even see Saudi Arabia getting the support of Bahrain, Sudan, even the UAE downgrading relations with Iran. So what does that tell us going forward, Richard? I don't think we can discount this. We have the number 1 and 2 oil players in terms of proven reserves in this region in Saudi Arabia and Iran. Saudi Arabia, 265 billion barrels. Iran hovering just over 150 billion barrels. And with tensions here, it changes the dynamics. We often talk about the supply of U.S. shale onto the market, Russia producing at record levels. But at the end of the day, in 2015, 30% of the oil on the market came from the Middle East. So you don't want to see those with the number 1 and 2 reserves going at confrontation. If you ask anybody in the Middle East, even investors in the broader market, what is the worst case scenario? And that is a conflict between Saudi Arabia and Iran. We've never been so close to that. Right now it's a war of words, but it's starting to impact the market at the same time.
If it remains a war of words, it could also become a war of production, each deciding to produce and actually pushing prices further, because the scenario you've sketched, the realistic scenario, assumes a physical conflict.
A physical conflict indeed, Richard. I would go as far as to say we've never seen OPEC in so much disarray. They just came out of a meeting in December. Many thought they would plan for the return of Iran into the market in the first quarter of 2016. What did OPEC do? They kicked the can down the road, didn't factor in Iran, the potential return of Libya to the market as well. The Iranian oil minister, Bijan Zanganeh, has told me face-to-face he wants to add up to 1.5 million barrels to the market in 2016 if the sanctions can be lifted. And in fact, when you go to an OPEC meeting, you've always seen the tensions, Richard, between Saudi Arabia and Iran. They both put up candidates for the Secretary General of OPEC, and they can't reach an agreement, both on very polar opposites, coming at the worst time at the start of 2016 as Iran tries to get the sanctions lifted. And I would add another caveat here. Saudi Arabia never liked the P5+1 deal with Iran to see the sanctions lifted. Perhaps this is their last stand, their last push here, very dramatic push to get the Sunni players on their side to say we don't like a deal and we'll ratchet up the tensions between ourselves and Iran.